long-term care insurance. Yeah, I have been looking at it now that I'm in retirement and still eligible to basically be insured. But they've had a lot of turmoil in that part of the industry, the insurance industry, and I just kind of wanted your thoughts on long-term care insurance.
Yeah, that's great.
Could you
Sure.
kind of give me something on it?
So here's the thing. I love the product, and I love the concept of the product. I think it's a good one. And I think that there's been a lot of turmoil. There's a lot of companies that have just gotten out of it because their actuarial calculations were all messed up from when they first started. And a lot of them, some of the very good ones that were in it, just got out of it altogether. And then we saw a rapid increase in premiums over the years. Now, here's the thing about it. The vast majority of the people that have it don't buy it right. And what I mean by that is the downside to it is you can get long-term care insurance quote, and you can say to the agent, wow, this is really expensive. Oh, I can, let me look at, well, how about we do this and how about we do that? And they take this thing out and they take that thing out. And you finally get it to where you can afford it, but you really don't have a product. You've got a 3-year payout, which is great, but the payout is not the cost. You got an average cost nationally of a nursing home at about $265 a day, and this is paying. I'm just making numbers up here. You got a plan that's paying $150, so you're still out of pocket for a considerable amount of money. The other thing is they let go of the rider for inflation protection. So you start out with a $150 a day benefit, and with an average cost of, say, $250 a day. And by the time you need it, the average cost is $400 a day, but you still have a $150 a day payout. So it's very difficult to buy right. And if you buy it right, it's even more expensive. The other side of it is there's a lot of people that it works well for. If you have a very significant portfolio in your IRA and 401k or whatever and your other assets, chances are the dividends that portfolio produces, if it's established right, can pay for your long-term care needs. So you don't really need it. If you have very little money, then you shouldn't be spending the money every month on the long-term care insurance, because usually at some point in time, if you end up in that environment, because remember, the risk is you pay for it and never need it or use it. And if you end up in that environment, you're still going to have to use what little assets you have to spend down. And then once you spend that down, even with the insurance, you can't pick up the amount that it doesn't cover. You end up on Medicaid anyway. So you shouldn't be spending the money for it. So it's for those people somewhere in the middle there of that want to try to preserve, to keep what assets they have intact as much as possible. And that's the hard part, to determine that. So it's a very difficult product to buy. So all I can say to you is think about it long and hard, but think about those considerations of buying it right and how expensive it really is, and is it going to serve you well. The other thing I tell people, just get it on your wife if you're married, because she's the one that is likely to need it more than you, and you kind of minimize your costs.